Let's look at a few top-notch growth stocks. Let's look at some of the growth stocks to buy despite the issues in the economy. Salesforce has strong growth and a reasonable valuation and is a buy should the market come under pressure. Palo Alto Networks has robust earnings growth and steady revenue growth amid consistent demand due to cyber threats. Trade Desk is an excellent company with strong growth and solid profitability. Let's dive in. Here are the 3 growth stocks to buy if the market retests 2022 lows. Welcome to Timely Investment Research. In bull markets, everyone wants a piece of the growth stock pie. When it's a bear market, though, no one wants anything to do with these names. However, there are some quality businesses in this group that get dumped lower with the sell-off. So I want to look at growth stocks to buy if the markets retest the 2022 low. It always pays to have a plan, particularly right now. While equity markets are trading much better, many would agree that we're not necessarily out of the woods. With just 7 stocks generating more than 85% of the year-to-date gains in the S&P 500 and a rising rate environment, it's still possible for the indices to struggle. Put simply, we need to be prepared for all sorts of outcomes. It helped to be prepared when a handful of great stocks fell in October. It paid off to know where to buy some high-quality companies at what I call fantasy prices. In fact, a few of those names are included here. Let's look at the best growth stocks to buy if the market rolls over hard. Number 1. Salesforce. Back in the 4th quarter, I was a big fan of Salesforce. Now the value has been realized by the market and the stock has exploded higher as a result. From its 52-week low to the recent high, shares are up 58%. Have you ever used or worked on a Salesforce platform? It's incredibly sticky and intentionally so. In good environments and bad, companies simply can't part ways with Salesforce. It's what helps the company deliver its current growth. In February, Salesforce delivered a top and bottom line beat and issued better than expected first quarter and full year outlooks. CEO Mark Benioff said during the conference call, "It's one of the best performances of any enterprise software company our size, and it's amazing that Salesforce is now over $30 billion in revenue." He's right, and Wall Street knows he's right. It's why Salesforce has attracted 5 different active investors. Number 2. Palo Alto Networks. One name too many investors leave off their watch list. Palo Alto Networks, and that's even as shares were recently 50% above the low. Palo Alto Networks operates in the always prevalent space of cybersecurity. Unfortunately for the rest of us, cybersecurity is a very real and ongoing threat. It doesn't matter if we're in an economic boom or a severe depression, there will be hackers and cybercriminals looking for a payday. They will go after everyone from government agencies to big box retailers, and it's no surprise that Palo Alto's business continues to grow as a result. It's one of the few generally accepted accounting principles profitable cybersecurity firms that also boasts strong growth. Analysts expect 25% revenue growth this year and 21% growth in 2024. That's alongside estimates calling for 60% earnings growth this year and 16% growth in 2024. It's simply robust. This stock can go through big swoons, and if the market comes under pressure, I suspect Palo Alto Networks stock will take a big hit too. For long-term investors, it's an opportunity. Number 3. Trade Desk. I can't say enough good things about Trade Desk. Co-founder and CEO Jeff Green has built a terrific company with strong growth and impressive profitability. Before and now after the COVID-19 pandemic, this firm has been profitable. For a growth stock, that's rare and impressive. The stock came under strong selling pressure last year, suffering a peak-to-trough decline of about 65%. It found strong support around $40, although there's no guarantee it will see this level again. Analysts expect about 20% revenue growth this year and 24% growth next year. On the earnings front, estimates call for just 8% growth this year, but a big acceleration of up to 27% growth in 2024. While Meta, Alphabet, and other mega-cap tech giants are not able to operate in China, the Trade Desk is. I think this firm will be a monstrous winner and is one of the best growth stocks to buy for the long term. If we get a retest of the 2022 low for the S&P 500, the Trade Desk should be on sale. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.